Good morning, welcome to the InsurTech Summit. The fourth day of Istanbul Fintech Week will host sessions on insurance innovation. We will have sessions on the topic, and the day will end with Fintech startup pitches from various countries. Let's start with the first session. We have a keynote address from an industry expert and known name. Minh Tran from Mandalore Partners will present on insurance innovation yesterday and tomorrow. Let's listen to what he has to say.
Yes, so good morning. Thank you for inviting me to speak about InsurTech yesterday and tomorrow at the FinTech Week. My name is Minh Tran. I'm the managing partner of Mandalore Partners, and we do work with insurance companies around the world. And our focus is to de-risk insurance innovation with strategic investment. So in a nutshell, we look at what we need to do to innovate with insurance company, how to source the best technology, and then make strategic investments on behalf of the insurance company through SPVs. I'm going to start my presentation now about insurance yesterday and tomorrow. Normally, you should be able to see the screen online. Yes. So if you need more information after the conference, you can either email me or follow Minh Tran on Twitter, and I will happily send you the information. As a background, I'm a long-time investor in the insurtech space. I've been now an influencer for many years. My firm is called Mandalore, but I do research also under the brand Alchemy, and we show you in a minute what's going on. The work that I've done in the insurtech started in 2012, when insurtech was not even named insurtech. And for the past few years, I've seen the number of investment growing tremendously to become a category in itself. In the beginning, insurtech was there for insurance to make strategic investment as a defensive mode because they were scared of what Google could do in this space, for example. And then a few years later, I think it started in 2014 to 15, there was a pickup of investments because insurance were more in the partnering mode. So instead of being in a defensive mode in the first few years, they start to make investments and become partners of insurtech for distribution or for product improvement. And that has been the case, for the past few years. And we see now, in a minute, we talk about what will happen tomorrow, that insurance are become more offensive or more active in prevention programs. So that's what I'm going to tell you. In the past, we've been looking at ways to disrupt the insurtech space, but more lately, with the impact of COVID-19, we look at how to spot new investment domains. So let me walk you through this part on how I do it in order to spot investments. Before we look at the future, we can look at the past. And if you remember, back in 2008 and 2010, there was also a period of darkness and of financial crisis. But then 17 startups were credited during that time, and they are now unicorns. So we use this simple framework to explain how to spot new innovation. Basically, it's very simple. It's the merge of user trends, business trends, and technology trends. When you see the merge of those three, there will be a disruption technology, and it's a good space for investments. As an example, if you look in the past, back in 2000, in the early 2000s, people wanted to discuss about listening to music online, or not listening to CDs, but listening to songs. Then suddenly there were Napster and the merge of the search of digital right management solutions. enabled to do music online, and you also be able to pay artists. And then we came to a business model was $1 per song, and that was the birth of the iTunes of the world. So from Apple outside the music labels to show that disruption will come outside the industry, and later on, now Spotify and Deezer and so on and so forth. So that's, in a nutshell, a very good framework to spot technology disruption in any industry. So now we're going to apply it into the insurance space. And if you scan, for example, the top 10, but the top 100 article on InsurTech and COVID-19 this year, you will see the following trends. So let me walk you to each trends, and then afterwards discuss about where we see disruptions. So if you look at the user trends, you see 3 trends going right now, and they're going to last for the future. It's the increasing demand of insurance coverage, especially in travel and health with COVID-19. Clearly, everywhere you see a change in the insurance coverage as a demand from user. As you know as well, the adaptation of digital solution, everything is going online now. Teleconsultation was 8%, now it's 80%. So we'll see a quicker adoption of digital solution coming from user demanding that from insurance companies. And obviously, increasing awareness of policy around risk associated with pandemics. Obviously, you can see, for example, the people on Zoom, as we're doing now. There was, I think, maybe 20 million before, and now you get to probably 100 million that adopted Zoom. So there's a trend there on using tools online. The second trend is about technology trends. With no surprise, you can see an increase of the use of data provided by technology companies. Digital interaction, obviously, because that's based on demands, and an increased usage of cloud storage. I'm not going to spend a lot of time because the technology are quite obvious here, but we see the emergence of what you call the stay-at-home tech index, basically all technology around the stay-at-home segment, which makes a lot of sense with what's happening right now. So in a nutshell, tech is adapting to user demand. User demand changes, tech adopts the different usages and provides some solutions. The third trends, it's around business trends. Here, from the insurance point of view, there's a lot of change in operations. People were not used to work completely fully digital. So there's a change in everybody, but also in insurance companies. People are reassessing risk because the data that they used to have in the past, they don't have it now. And in order to price premiums, they need to collect new data. So I think risk is being a challenge with this change of user. And obviously there's some financial impact. Some people have lost some contract and so on. That's a main trend that we are seeing. There's a case to illustrate that. It's about Flyer. So Flyer is one of the company I invested in. They do pricing, airfare pricing. So if you want to go from Turkey to Paris, the flight will cost you X euro, and Flyer we can help you to predict whether the price will increase or decrease. So it was good for travel insurance to price it. But now with the change of behavior, all the data collected in the past or patterns need to be readjusted. So there's a change in operations. The risk is not the same because it's a new usage, and clearly there's some financial impact, and people have to adapt. So that's basically an illustration of how the business trends we feed technology development. So first part, what we do is we analyze each trends as a single track. And then afterwards, we try to combine those trends into the description. And we come up with three hypotheses that are no surprise to you, but I'm gonna explain them to you with the backup. So the first one is the acceleration of digital transformation. Clearly, if you are head of innovation or head of digital, whatever, in the insurance company, you will be forced to accelerate the digital transformation, basically because user want it, because the technology that you have need to adapt to the user, and basically you are facing change of operation. So clearly those three trends will force you to accelerate digital transformation. You can see media insurance moving online with telemedicine, it's kind of a no-brainer here. The second thing is need of personalization. You can see UBI or user base in insurance. There are needs of new coverage or a specific coverage when you travel, when you have health. Mental health, for example, is becoming a new issue. And therefore, you need to collect new type of data to assess the risk in your business. So the three trends, make us conclude that there will be more and more needs for personalization. User base in insurance, it's actually a growing trend. And then lastly, as I said before, some insurance are taking an active role to become more into prevention. There's a demand of user to be more aware of risk associated with pandemics, obviously. Technology will become more interactive, and with the financial impact, there are insurance that have no choice but to prevent. The more you prevent, the less you have to pay in case of a claim. So, as a business model, people are forced to implement more prevention program. So if you insure a certain category of population, so if you insure bakeries and so on and so forth, you know that a lot of claim are around dental, and therefore you do more prevention around dental. Dental not because they eat candies, dental because of the specificity of the work that they do. And that's the reason why a lot of insurance companies are doing more and more prevention impact programs. So sustainability, it's a growing trend, and that's what we see in the future. So in a nutshell, what we see from this year, learning from the past, going for the future, is those three trends, right? Digital transformation, need of personalization, and prevention impact. So as a conclusion, we can say for this first part that if you are the chief innovation officer of any insurance in the world, your role will be more important than ever before. That's clearly the case. Now, if you look into the future, what we've done with this framework, we went out and reached out to 40 insurance companies in the world and asked them, what would be in your plate for 2021, what you need to do going forward. What are the things that you are looking at? So we come up with four themes which are the consolidation of our research worldwide with 40 insurance under the brand Alchemy Research. And Alchemy Research has come up with four themes. The first is about reinventing operational resilience. The second is about tapping into new health awareness solutions. The third one is more on climate change and sustainability, and the first one is emerging risk. Let me walk you through each of them with very quickly on what we want to do. So the chief innovation officer of the world are saying, first, with COVID, operation has started and moved to digital, how to reset, how to restart, and where is the best way to fast track my operational resilience. Clearly, that's something new for everybody, and it's also new for the insurance companies. So that's the first point. I'm not going to spend a lot of time on that, but it should make sense to you. The second one is around how do you address mental health with employees and also with your clients' employees. So mental health has become a emerging source. People are getting, are working from home. There's a lot of burnout, and people are getting sick. Also, when they're sick, they're spending more time and they're not going back to work. So those are becoming key issues. And one way is to better monitor or better help employees to work from home or from new work environment, and how to address mental health before you stop work. Right? So that's the second topics for insurance companies. The third one is, as you can see, a lot of insurance are getting away from coal investments and so on. Sustainability is a key topics going forward. First, people are starting to put ESG indexes or KPIs in the work, and more people are moving from ESG to impact. ESG is the negative impact to reduce. Impact scoring, impact investment is more the positive to increase. So for insurance companies, ESG would be to have more diversity or to reduce paperwork, or more energy saving buildings, less paper, sorry. But that's not gonna be a good indicator of your performance. So a lot of people are putting more impact scoring. So you can see, for example, some company becoming a social benefits corporations, or social purpose companies or social purpose insurance. Some people are starting to become more focused on sustainability insurance, etc., because then there's a clear correlation between impact investment or strategic products that could increase your performance going forward. And that is key for us to monitor in the future. The third thing, the last thing, sorry, it's around cybersecurity or emerging risk. People are facing more and more issues, and it's the same thing. Usage is changing. You need to use tech to collect new data, and therefore those data will help you to make new pricing and so on. But how to collect data, that's the key word of what we're trying to do. Source for the right technology or new technology to help you better understand user pattern. And that's basically the four themes that we see in the future. How to capture this more concretely for insurance company. We work with vehicles called SPAC that enable us to do strategic partner acquisition company. It's the short name, the acronym for SPAC. So, for example, if you are a chief innovation officer and you have one of the four themes to do for the next 12 months. So let's take you take emerging risk, right? Parametric risk in climate change and so on and so forth. And you need to go forward, right? And how do you do it? Well, if innovation is clear to you now, you need to be exposed to technology, and you need to source technology in Turkey or beyond Turkey in order to import the technology or learn about the technology in the US or in Asia and so on and so forth. So if you do it on your own, that works. Usually you don't do it on your own. You use the ecosystem to search for new technology. So investing in VC funds, trying to create corporate strategy, investing in accelerator, incubator, and so on and so forth. You can use also people to source technology for you. That's one other thing. So what we do is we source technology. So SPAC is a vehicle. It's becoming a very popular vehicle for strategic partners to look for the right technology for them. Because when you search for the technology and you find, this is, 5 or 10 different technologies that I like to work with, you can either build your own, partner with them, invest with them, or sometimes buy. And the vehicle, it's SPAC enables you to invest or buy quite easily. And that's why innovation officer are becoming also investment officer. And the way it works is, for example, they decide on one theme, climate change. Therefore, I want to be searching for parametric risk. Then they create vehicles that they call strategic vehicles or investment holding. They find people like us or many other people like us, like VCs or people who are exposed with technology companies, to introduce them different innovative companies that can help them to accelerate the digital transformation, because on their own it's going to be a hard code. So it's more around open innovation, and then they invest, partner, buy those technology going forward. So again, people in the US doing M&A will tell you that M&A in the insurtech industry will pick up here. And that's basically the end of our presentation. So just to summarize, since I have a bit of time, the first thing is, learn from the past. The framework that we have about finding technology description by following user, technology, and business trends is a good framework. The past will tell you what's going to happen, in the near present. So we have come up with 4 themes that we are, the key themes for innovation officer to tackle. And then in the future, we see that the innovation officer will also become investment officer, because they will have to be working open innovation. And then one of the vehicles that we see coming up in the future are the SPAC. And that's all I have to say for today. Thank you very much for letting me speak at the conference.